Welcome to the Stock Market Morning Prep video for Wednesday, August 13th. Markets were very quiet. We did get red across the board, very small, 1 to 0.2%. Dow Jones down 9.25, Nasdaq down 12, S&P down 3, and Russell down 8. Very quiet. Not the pullback that I'm looking for. I wanted to see some more movement to the downside, maybe a little bit more fear involved. So we're not getting that. We are up now early in the pre-market. I'm recording this, and we're up about 7 handles in the E-mini electronic session. So some positive overflow going into the Europe session. So where do we go from here, right? This keeps continually. We were asking, where does this market head? Are we now going to retrace lower? Well, we're in the sweet spot, right in this area. We're in the zone where the market should be vulnerable for a reversal and continued downside movement. But we haven't seen the trigger yet, right? We want, not only when price gets up to these areas, we want to make sure that the markets give us a trigger point before we enter short. Right now, it's not doing it. It's very quiet. We are now at the end of the summer, and these last 2 weeks are notorious for very quiet, subdued trading. Now, there are times that we have movements that are exaggerated because there's no one here and there's lack of volume, so that's something also to keep in mind. I would not be surprised if the markets actually start to sell off. Now, if we do not get a movement to the downside, I think that it would be setting up pretty nicely for some sort of a September move lower. Now, can we chop around for the next couple of weeks? I think so, but I also think that with all these tensions around geopolitical tensions that are going on in Iraq, and then you have the Israel Palestinians, and then of course the Russian-Ukraine, I think something is just going to escalate and explode to push this market lower, and that's the catalyst that we would need to really say, okay, all bets are off to the upside. We're not getting that yet, right? And the best thing to do is when in doubt, stay out, and let's just sit on our hands. Or if you are in front of the screens all day, look for the best trade setups, and believe me, they are far and few in between at the moment. Markets and stocks are just not moving at the moment, so we've kind of paused a little bit, which is kind of a bullish thing. So what I've done is I've been looking for some of the commodity sectors, some commodity-related stocks that have kind of, commodities that have been beaten down a little bit, and looking for some seasonal strength. And I found that gold coming into right around the end of July through September, a lot of gold and gold mining stocks actually fare well. And we also have oil, which comes in the mid of August, right around now, right through Labor Day. You have the driving season that comes into play with oil itself. So oil has been really battered for the last 5 weeks because of the lack of uncertainty in the Russian-Ukraine. Very subdued. We're in talks, they're in sanctions, and nothing really is happening as far as a war premium to be built into oil. So oil just kind of drifted lower, and I like oil. I always do, and I like oil for a big run-up at one point. Now, did we just go buy oil? No, of course not. If you're a longer-term investor, I would be nibbling in oil at these levels and putting a dollar amount in it until one day you wake up and you'll see oil prices up pretty decent. So keep an eye on oil, crude oil, or the USO, the ETF tracking fund of oil. And I want to show you the charts. I want to go first. Let's go into gold. Here's the GC contract, the gold future contract. Nice little cluster, Fibonacci cluster of support. And let me open this up. You'll see that we have a nice big bull flag into a moving average support. We're just underneath the 200. So a nice break above the 200. I could see gold kind of pushing up a little higher here, at least to these highs at 1334. Not a great big move, but something that would for a trade for a couple of days, 2-3 days, maybe even a week or so, fare really well. The other thing is the gold miners. Newmont being the biggest and biggest gold miner, just broke out of a big long-term resistance area, as you can see here. So not bad, and I think that this is ready to really start making a move, some of the gold mining stocks. So keep an eye on them for a trade for this week going into next week. And actually, for that matter, pretty much most of the month of August, the rest of the month of August. Now, the other one I like is obviously is crude oil. We have a little cluster of support right up in here. We've been literally been battered for the last 5 weeks. We had this little symmetrical triangle that actually failed to the downside, and I showed this to you. Let me just put this out here. We failed right here, and you can see this triangle. Let me just open it up a little bit more, and sure enough, we failed and we broke down. And now we've just been kind of chopping up and down here for the last, let's call it 5, 6, 7 trading days. This is a retracement trade, remember, right? So if you're not good on retracing a counter trend, then kind of stay away. But this is a decent area here where you have a nice little fib area of support. We got a little bit of a horizontal channel here. So we want to see movement breaking back up to the upside, and even if you get to the target of par right up in here, that's even still a decent trade here. So watch crude oil for a trade, and you can track that via the USO as well. All right, so let's go right into the indexes. Nothing really has changed in a lot of the indicators, so I'm not going to bore you with the details. The bond's still well bid up, kind of pulling back here into a flag pattern again. And I like to buy bonds here. This is the area I like to buy, right into that 1272 from that top now support, right up in here, 137.31. You can also buy that via the TLT. And the ES here, a nice flag into area of resistance. We're up about 750 right now, early in the morning. So let's see if this has some legs to back up to the upside. And here is the hourly chart. Now, here is where I say we're in the sweet spot of resistance, where the markets could be vulnerable for a retracement back down to the downside. Now, I like this here. We've got a little cluster here, anywhere from the 38 to the 47. So give it 10 handles, right up in this zone. 50% retracement would come in nicely. I like to see that, and then get some market weakness, maybe a catalyst to the downside, and then I'd be looking to short the market. But I'm not going to do it yet because we did not get a sell signal. So I'm watching, and I'm looking for these areas here for failure in price. Okay. Next would be the IWMs. Just what can you say? Just a very ugly looking chart pattern. We got right back to the 50% retracement, and we sold back off again, and now we're sitting right on top of the 200 again. So if that starts to break down, really that downside target's going to be here, this new pivotal low that we had back in May. And most of the other indices, I'm looking for a 200-day target. We really already got this in the diamonds. I mean, the diamonds already started moving down. So I put some fib extensions here, 1272, 1618 down below. That'll be a target down here. And then the transports did a fib from here, high to low, and you can see we're at the 38% retracement. Even if we get back to the 50%, I think that's going to be a really decent area to sell into for a target. Eventually to retest the lows here, the lower end of this channel, and then ultimately this 200-day moving average. Okay, and then lastly is the Qs. Now the Qs have been holding up rather well. We did get some market weakness, but social media has been really looking pretty good here. Twitter looks like it's in the verge of starting to break out. You can see that in the ETF SOCL. A lot of social media stocks in there in that sector. And I like scanning ETFs at night to see what's relative strength or weakness to what the market is given for that day, and then you kind of dial down into that. And I noticed Twitter was one of them that was doing really well. Of course, LinkedIn. So that's another way of finding some good trade ideas. So keep an eye out on the markets. We are really coming into some really dog days of summer here, guys, where it's getting extremely quiet. But sometimes when that happens, the markets wake up to some sort of reaction. And again, with the three conflicts, major conflicts that we have going on in the Middle East and in Europe, Eastern Europe, you got to be very careful here, because anything could just start to explode. And that's what I'm looking for. I'm looking for something to really push these markets one way or the other. If we're headed back up, let's head back up, and if we're not, let's start to roll over again. And again, as of right now, it looks like the risk would be still to the downside. We had we had 1 week of movement to the downside, and that's pretty much it. And that's really been the pattern. So the pattern has been, now they buy the dip and they run up to new highs again. Now, is that going to happen? I don't think so, at least not yet. That's what the analysis is telling me. So let's keep an eye on what's going to come in the next couple of days here, okay? And then we'll take it one step at a time. Have a great day, and we'll speak to you tomorrow. Take care.